Welcome to Naseems Accountants YouTube channel. In this video, we'll explain what property repair and maintenance expenses are allowable, what costs cannot be claimed, and some important rules every landlord should know. Wholly and exclusively rule. The first rule to remember is that not all expenses are allowable for tax purposes. To be tax deductible, an expense must be incurred wholly and exclusively for your property rental business. This means the expense must relate directly to maintaining or managing your rental property and not provide a personal benefit. Reporting property expenses. If your total property income receipts are below the VAT registration threshold, you can generally include your allowable repair and maintenance costs in the Other Allowable Property Expenses section of your self-assessment tax return. However, residential finance costs, such as mortgage interest, are treated separately and should not be included in this category. Mixed-use property expenses. Sometimes an expense may relate partly to a rental property and partly to a non-rental property. In these situations, you can only claim the portion that relates to your rental business. For example, if you own a shop with a rental flat above it and repairs are carried out to the roof covering both properties, only the proportion relating to the rental flat can be claimed as an allowable expense. It's important to make a reasonable and accurate apportionment when calculating these costs. Examples of allowable repair and maintenance costs. Typical repair and maintenance expenses that landlords may be able to claim include: repairing a leaking roof, replacing broken roof tiles, fixing damaged gutters and drains, repairing plumbing and water systems, servicing and repairing boilers, repainting walls and woodwork, repairing damaged doors, windows or locks, replacing broken fixtures and fittings with similar items. General maintenance required to keep the property in a good rentable condition. Repairs versus improvements. One of the most important distinctions landlords need to understand is the difference between a repair and an improvement. HMRC generally allows tax relief for repairs that restore an asset to its original condition. However, improvements are usually considered capital expenditure and cannot be claimed as an immediate revenue expense. For example, a like-for-like replacement of old windows would normally be treated as a repair. However, upgrading standard windows to significantly higher specification installations may be regarded as an improvement. Similarly, replacing a basic kitchen with a substantially larger or luxury kitchen could contain an improvement element that may not qualify as a repair expense. Keep good records. Always keep invoices, receipts, contractor bills, and supporting documents for any repair and maintenance work carried out on your rental property. Good record keeping will help support your claims if HMRC ever asks for evidence. The key principle is simple. Repairs and maintenance that restore your property and are incurred wholly and exclusively for your rental business are generally allowable. However, improvements, personal expenses, and non-rental costs usually cannot be claimed as repair expenses. Understanding the difference can help you avoid mistakes and ensure you're claiming the correct tax relief. Book your free consultation with Naseems Accountants today on 01217714161 or visit www.naseems.co.uk. At Naseems Accountants, we help landlords across the UK prepare accurate rental accounts, maximize allowable expenses, and stay compliant with HMRC requirements. If you found this video helpful, please like, subscribe, and turn on notifications for more landlord tax tips, accounting advice, and business updates from Naseems Accountants.